It's time for Ask Annex. Got a question? You head to our website, annexwealth.com. In the studio, Fred Coleman, a CFP and a wealth manager at Annex Wealth Management. Welcome.
Thank you, Danny.
We got Matt Morzy, investment team manager. Welcome to you.
Hey, Danny.
Question number one. My wife and I invested every year in a 529 for our son. He has decided to enlist in the military upon graduation in the spring. He's our only child and says he has no intention of attending college after his service obligation ends. Neither my wife nor I intend on using the 529 ourselves. What are our options to retain the value of this investment?
In these situations, you have a few options. First option is changing the beneficiary to another family member. And the IRS definition of a family member goes pretty far down the bloodline, even to first cousins. The second option is withdrawing the funds and paying the taxes and penalties on the earnings and just moving it into a different type of investment account. That way you can still continue to invest, just lose the need to use it for college expenses. The third option is a newer option that allows you to roll the 529 into a Roth IRA in your child's name. To do this, the 529 account must be open for 15 years. It cannot exceed the annual contribution limits, and no contributions within the last 5 years may be rolled over. The max that you can roll over is $35,000.
Next up on Ask Annex, I got to temporarily pause either my HSA or 401k contribution. Any opinion on which? Probably no more than 6 months.
Yeah, that's a great question, and one that, from time to time people have to decide, how am I going to save? I either have to limit what I'm doing right now because of situations that may be outside of my control, and I've got to decide where I'm going to go. Financial planning, this is really, really important for this. You could take a look at long term, which is going to be a better decision for you. Short term, you kind of look at it a couple different ways. From a 401k side, are you getting a match on that contribution? If you are, you probably want to do that because otherwise you're giving up that free money, and who doesn't like free money? After that, if you already are getting past that match standpoint or you don't get a match at all with your 401k, I love HSAs. They're one of the things that I believe in really, really strongly. Plus, if you're in a situation where you need to scale back how much you're saving, that might be a time where you might be worried about an emergency popping up or something else going on. And at least if you put that money in the HSA, if that emergency is due to health reasons or something comes up that's outside of your control from a medical standpoint, you can use that money without penalty, without any taxes or anything like that to pay for those health expenses. So that's one of the reasons why I love the HSA.
Yeah, and this is also an opportunity to reevaluate your financial plan and emergency funds because we know in life it's not a matter of if these situations will come up, but when they'll come up.
If you've been listening to our show for a while, you know that Ask Annex sometimes can provoke some arguments. We've talked about backyard barbecues where
tailgates.
People have gotten into things. Well, here's a new one. This argument came up at a football tailgate. One of my friends is advocating investing in defense-oriented companies based on world events. Another says it's probably too late.
Yeah, I love these types of arguments. I even, get into these arguments with my friends sometimes, and they're fun. But, ultimately, we never know. We do know that sometimes defense stocks can get a boost due to different world events, but it's not guaranteed, and it's very difficult to time in the short term. So once you hear about it on the news, it's probably too late if you're looking at that short-term boost. From a long-term perspective, we know military spending will always be in the government's budget, and these stocks tend to lean towards more dividend paying. And so if you do need income in your portfolio, they can be an option.
Yeah, I think you made a couple of great points there in front. Maybe we need you on the investment team because that's some of the stuff that we look at every single day. And I love that we've got guys on the team that's all that they do is dig into individual companies. They're on their earnings calls. They're reading all the reports that come through, and they're looking at it from a long-term perspective. Short term, a lot of times when there is a geopolitical event, you're right. We see that event happen. There's a reaction in the stock. A lot of times that's very short-lived, and if it was a big boost up, a lot of times that pulls back pretty quickly once that that sentiment loses a little bit or that air pops out of that balloon a little bit for the extent of that one company or maybe that sector. So what we like to look at is this company positioned to do well long-term regardless of specific events? Is it something that they have great management of that company? They're managing employees well. They're managing capital well within that company. They know how to get what they sell out into the market and do so with a quality balance sheet and make it a profit every single year. So we're looking at those individual companies for that. From a sector standpoint, you're right. A lot of times that tends to be short-lived, and the government is always spending a lot of money, and that goes up every single year. So there's kind of a tailwind behind there. But how well is that company managed ultimately is going to decide which companies are the ones to invest in.
Matt Morzy, investment team manager on Ask Annex. Thank you.
Thank you.
Fred Coleman, wealth manager and a CFP at Annex Wealth Management. Thank you.
Thank you.